Welcome to Paran Yashama. Don't forget to subscribe and hit the like button to support the channel. Money. It's something we all use, chase, and depend on every single day. But have you ever stopped to think about how money actually works? Most people spend their entire lives earning it, saving it, and spending it without ever really understanding its true nature. Today, we're going to uncover the hidden mechanics of money, where it comes from, how it moves through the economy, and why. Let's start with the basics. Money, in its simplest form, is a tool, a medium of exchange that allows people to trade goods and services without having to barter. Instead of trading a chicken for a loaf of bread, you can simply use money as a universal language of value. But money is more than just paper bills or metal coins. In fact, over 90% of the world's money doesn't physically exist. It's just numbers on a screen. Most of it is created digitally by banks through something called fractional reserve banking. Here's how it works. When you deposit $100 into a bank, the bank doesn't just keep that money in a safe. Instead, it keeps a small portion as reserves, let's say $10, and lends out the remaining $90 to someone else. That person spends it, and eventually it gets deposited into another bank account. Then, that bank lends out 90% of it again. This process repeats over and over, multiplying the amount of money in circulation. Essentially, banks create money through lending, not printing. This is why central banks, like the Federal Reserve or the European Central Bank, play such a big role. They control the amount of money flowing through the economy by setting interest rates and regulating how much banks can lend. When interest rates are low, borrowing becomes cheaper, encouraging people and businesses to spend and invest more. This can stimulate growth, but it can also lead to inflation if too much money chases too few goods. Inflation is the silent force that erodes the value of money over time. What you could buy for $10 20 years ago might now cost $20 or more. Governments often aim for a moderate level of inflation, around 2% per year, to keep the economy growing steadily. But when inflation gets out of control, it can destroy savings and confidence, as seen in historical examples like Zimbabwe or Venezuela. Now, let's talk about another important concept: value. Money itself has no real value. A $100 bill is just a piece of paper with ink on it. Its value comes from trust, the belief that others will accept it in exchange for goods or services. That's what makes modern money fiat currency. It's not backed by gold or silver, but by government promise and public confidence. But what happens when people lose faith in that promise? Throughout history, whenever confidence in a currency collapsed, societies turned to alternative stores of value, like gold, silver, or more recently, cryptocurrencies. Bitcoin, for example, was created in 2009 as a decentralized form of money that no government or bank could control. It's based on blockchain technology, which allows transactions to be recorded transparently and securely without the need for a central authority. Some people believe that cryptocurrencies represent the future of money, a system where individuals, not institutions, have full control over their wealth. Others argue that it's too volatile and risky to replace traditional money. Whatever the truth may be, one thing is certain: technology is changing the way money moves faster than ever before. Digital payment systems like PayPal, Apple Pay, and mobile banking apps have already made physical cash less important. In countries like Sweden, less than 10% of transactions are done with cash. The rise of digital currencies and fintech innovations is reshaping the financial world, giving people more accessibility, but also raising questions about privacy and control. Ultimately, understanding how money works gives you power. It helps you make smarter financial decisions, avoid debt traps, and build real wealth. The system may be complex, but at its core, It's about exchange, trust, and control. When you understand where money comes from, how it's created, and how it loses value, you can start making it work for you instead of working for it. So next time you see those numbers in your bank account or hand over a few bills at the store, remember, money isn't just something you earn or spend. It's a system built on belief, controlled by policy, and shaped by human behavior. And the better you understand it, the better you can master it. Thank you for watching Paran and Yashima. If you learned something new today, don't forget to like, subscribe, and share this video with your friends. See you in the next one.